Now, we come to our final speaker, Henri Arslanian, FinTech and Crypto Leader, Asia PwC. Henri, I guess, no stranger in this field and a very passionate industry enabler. Henri will go through the history and mechanism of Bitcoin and cryptocurrencies, as well as the recent developments such as Facebook Libra and central bank digital currencies. He will share the latest global trend, including the entry of institutional players and financial institutions in the market, and policy and regulatory development, as well as other fast-moving topics such as stablecoin, tokenization, decentralized finance, and the potential impact of this development in the future of financial service. So, and Henri is actually traveling, and he's going to join us online all the way from the Middle East. Henri? Hi, Henri.
Excellent. Thank you very much.
Hi,
Let me
Henri,
make sure
yes.
you can hear me well?
Yes, indeed. I think it's Excellent. A good afternoon to you, isn't it?
Well, it doesn't matter. You know, crypto world never sleeps. It's a reality, one of the assets that is 24/7. So great for having me. And thank you for everybody for listening and, you know, for allowing us to share our passion of the future of money, cryptocurrencies. As was mentioned previously, this is a crazy time what's happening in crypto markets right now. So very, very excited to be with you all today.
Yeah, excellent.
Maybe a couple of things I'll talk about today. I'm really, really excited, as I mentioned. This is literally what I focus on. And before I start, though, I want to give you guys a big warning. You know, and the big warning is that whoever tells you they're an expert in cryptocurrencies, you got to run away. You know, Henri introduced me as an expert on the topic, but I can tell you I have absolutely no idea what's going to happen 1 month from now in this space because it's moving so fast. To put things in perspective, it's a bit like dog years. A week in this world is like 7 weeks in a normal world. It moves absolutely crazy. I mean, just to put things in perspective, the last 48 hours, we had some groundbreaking developments already that completely changed. I had to change the slides 5 minutes before this presentation today because there was new developments coming in. So again, this is why things are moving forward very, very quickly. But today, what I want to do with you all, I just want to share with you 6 global trends. That's it. Nothing more, nothing less. And hopefully empower you and actually give you some idea of what is happening at the global level, and then let you make your own decision on what you think the impact cryptocurrencies will have on your business, whether you're in the insurance business, you're in the banking business, or any other asset management sector, and also on you personally in your career. I can tell you, and I say this to many people, if you're on any executive right now and you do not have a crypto strategy, you're already late. Whether in a banking sector, asset management, or even insurance, there's a lot of developments that you need to know on this side. So I promise you, at the end of this presentation, you'll have at least some of the high-level topics to make a view on it. But before we talk about the future of money, we should look at a bit of the history of money because it has a big impact as well. You know, if I put my professor hat on for a second, when we look at money, we look at 3 different characteristics: store of value, medium of exchange, and unit of account. And this, over the years, has changed. And what is our definition of this? For example, back in the day, it used to be cattle. You know, then we moved on to cowrie shells. Really, shells, because there was limited supply, people were using as a store of value. Then we started having the first coins that appeared. And then leaders realized that if they put their face on money, and actually they can actually make it work, they can actually make seigniorage, because there's a difference between the cost of production of money and what is actually worth on the market. And then we had, it actually started in Asia, we had the first kind of leather money that came out, then paper currencies. Interesting fact there, the reason paper currency took off in China, basically the emperor at the time, any money, any gold or silver that was entering the kingdom, everything had to give it back, and instead they were getting paper currency. And keep this in mind when we talk about DCNY and ECNY in a couple of minutes later on with what's happening in China right now. Then after we went to the wampums, which, by the way, we're still using Canada until the 1950s, where a lot of these Native Americans were using as a store of value. Then the first dollar bills came in. By the way, fun fact, it was called the greenback. We made it in green because at the time they figured there's no way anybody's going to invent something that can copy in color. Again, show you how we often underestimate technology. Then, of course, we had the end of the gold standard. In 1971, finally, fiat money was basically literally became mainstream, where it was not backed by gold anymore. And after 2000s, we had payments. 2020s, we had basically rise of cryptocurrencies. In this year already, and the first 12 weeks of the year have been an absolutely record year in the history of money. Make no mistake, when we look back at COVID and we look back at what happened the last 12 weeks, in history books in the future. It will be seen as a pivotal moment in the history of money. But before I do that, I just want to address a couple of things. I think Professor Chow addressed this a bit, is what is the problem that Bitcoin is solving? It's very good that we talk about wallets, private keys and public keys, but what is really the problem that we are solving? The real problem that we've been solving is a problem of double spend. What is double spend? Basically today, if I give you this $100 Hong Kong dollar note, you take it. If I give it to Henry will take it, look at it. It's not a fake. Then he knows that it went from me to him. The problem we have then is actually when we move this to a digital world. If I take a picture with my iPhone of this $100 note and I send it to Henry, it's great, but nothing stops me sending the same picture to all of you listening here today. And which is what we call the problem of the double spend, which is a problem that we've always had. And by the way, we've been trying to solve for many decades. In the 80s, people came with solutions, 90s, people came with solutions, but it was too early. And of course, nobody paid attention to it until finally we had the financial crisis of 2008. Around October 2008, Halloween Day, this little white paper appears by somebody, maybe a man, a woman, we don't know, who basically called Satoshi Nakamoto, who comes up with a way that for the first time, two people can send each other value without any intermediaries. And again, if you look today, the way we dealt with this double spend problem that I just mentioned is that we have intermediaries in the middle that actually basically do the debits and credits or kind of manage the books of all these transactions going on. And I just want to also add a couple of things as well that are important to note. Today, when we're making every single Bitcoin transaction that is taking place is public. I always say this, if you want to buy drugs, you want to do something illegal, you want to launder money, do not use Bitcoin. 100% you will get caught. Because the difference, unlike fiat transaction, the banknote that I can give to Henry, every single Bitcoin transaction that takes place is kind of tracked on the ledger. Again, we don't know who it is because it's numbers to numbers, but actually now with a lot of the traceability tools in the system, as soon as somebody has done a type of transaction or has done KYC on any exchange, we're pretty well can actually trace them down. The other thing I think it's important to note is actually the monetary policy is very clear. And we just talked earlier in the presentation how the monetary policy, 6.25 Bitcoin are created every 10 minutes. And this is the case with Bitcoin. There's no quantitative easing. The central bank cannot print more money. And until the year 2140, we know exactly how many Bitcoins will happen every year. We know that in total, there'll be only 21 million Bitcoin. So we know exactly what the monetary policy is. And by the way, every 10 minutes, we know exactly who's been mining it. We don't even need auditors technically. We know exactly every 10 minutes what blocks are taking place. Again, all of this was theoretical until 2010, where the first time a value was put on Bitcoin. Where that summer, a developer went on Bitcoin Talk, which is a chat group, and said, hey guys, I'm happy to give you 10,000 Bitcoin for whoever sends me pizza. And this lovely guy sent them pizza for 10,000 Bitcoin. The poor guy, there's each one of these pizzas now is worth over $500 million. Actually, probably more now since the last 2 days. And actually, by the way, if you want to feel even worse, that summer, many times he ordered pizza like this. So imagine how much money that would have been worth today. But the reality right now is crypto markets are worth over $2 trillion. Bitcoin itself is worth over $1.1 trillion. So there's a lot of activity going on. So let me focus on some of the developments I think you, as an executive, as a member of the Hong Kong crypto financial ecosystem, you need to know. One of them is the entry of institutional players. Again, a couple of years ago, I've been in the crypto space now since 2013. In the first years, when I used to go to these meetups, my nickname was Suit Henry, because at the time I used to work at a bank. I used to come from the bank in my suit. Everybody used to make fun of me. I was not only the only guy in a suit, I was probably the only guy wearing pants. And now, but things have changed a lot. Now, really, the big developments happening are being driven by a lot of the institutional players. For example, you have now a lot of the ecosystem has been growing a lot. We have many crypto providers, a lot of players in the crypto ecosystem that are generating hundreds of millions of dollars of revenue a year. I mean, from like Coinbase, for example, now is worth more than many of the banks that the HKMA regulates. But also what's remarkable now is a lot of the industry players are becoming more institutionalized. So again, in the early days, it was a lot of startups. Now, a lot of these big companies that we are seeing in the space are actually getting their SOC 1, SOC 2, Big 4 audits and the likes. But also, a lot of the institutional players are entering the space as well. Again, make no mistake, some of the big developments that we are seeing in the space and the big developments that we will see this year and the next year to come are being driven by some of the large financial institutions. Again, but why is that? For a couple of reasons. One of them is very straightforward. It's an opportunity for them to make more money. Of course, what's beautiful with crypto, it's often an opportunity for a lot of the banks, as a lot of the margins and competition heats up, to come and actually try to dominate a new greenfield space. And we've seen this in many verticals of crypto. For example, crypto custody. People used to self-custody before 2 years ago, 3 years ago. Last 2 years ago, we started having regulated firms. And now pretty much every large financial institution is coming up with some crypto custody or crypto offering of some sort. Again, custody is boring, but again, an example of how these firms are operating in the space. But also the other reason financial institutions are entering the space is because there's demand from existing clients. A lot of the big clients, not only the big corporates, companies like Tesla that has bought 1.5 billion, companies like Meitu in Hong Kong that has bought $40 million of Bitcoin, companies like Nexo in Tokyo that has bought $100 million of Bitcoin on their balance sheet, but also a lot of the big funds. Those are actually the buy-side counterparties to many of the sell-side firms listening today on this session. Because when your clients want to do something, you'll figure a way to do it. And actually, that's what we've been seeing, a lot of activity in the space. But also there's been also another big development is increased regulatory clarity. You heard previously from Clara, who explained how actually the SFC has been providing regulatory clarity in the space. And actually that's the case not only in Hong Kong now, but many jurisdictions around the world. We now have regulatory clarity. Case in point, according to Cambridge University today, only 5% of regulators do not have somebody working on crypto. So it shows you how fast things are moving. But also, the thing people hate the most, tax. There's increasing the levels of tax clarity. Let's put even Hong Kong apart. You can ask any American this year, every single American this year got a question on their tax return saying, did you trade crypto last year? If yes, you got to disclose it. So again, as there's more regulatory clarity, tax clarity, it's reasons you should see institutional investors come in. Second big development is really the rise of stable coins. So what is a stable coin? It's literally it's a digital currency that is backed one-to-one by fiat money. So what does that mean? It's basically your digital currency has actually backed by fiat money. And you may say, okay, that's interesting, but what are these? Actually, there's a number of those in the market. There's some that are regulated, especially in the US. There's some that are not regulated, like Tether, by the way, that started in Hong Kong actually a couple of years ago. And there's many others that are decentralized. But actually what's important to understand is actually this has been really growing. To put things in perspective, literally about 14 months ago, in January 2020, there was only less than $5 billion in stablecoins. And now it's over $80 billion. Assets like Tether, a stablecoin like Tether, trades more than Bitcoin every day, trades at least a minimum of $100 billion on exchanges. So this is moving very quickly. But you'll say, Henry, but what is the benefit of this? Why would somebody use a stablecoin? I can see what somebody buy Bitcoin because there's a store of value, the price can increase. But why get a stablecoin? There's a couple of reasons to it. One of them, if you're a trader, let's say markets are volatile, you want to stay within the crypto ecosystem, but you don't want to go to the fiat world, especially at dealing with the banks is so difficult. This is one thing you can do. You stay in stablecoins. But where we're seeing increased demand right now is when it comes to cross-border payments. Because what the benefit of a stable coin is you can make a cross-border payment instantaneously, works 24/7. My lovely bank in Hong Kong, which you all know, for example, does not do FX transactions on Sunday, doesn't even do cross-border payments on Sunday. I don't know, maybe my bank goes to church. I don't know, somebody at the bank has to explain to me. What did I do a couple of weeks ago? I had to send money from Hong Kong to my lovely young sister in Montreal, Canada. My lovely bank was not doing transactions. What did I do? I sent a stable coin. Easy, she got it immediately on the spot. And by the way, this didn't have all the hidden and explicit fees that the banks charge you, for example. And this is why you're seeing a lot of more and more people use stable coins. The other interesting thing as well, think about the remittance world. For example, today, the average cost of sending money around the world is 7%. In many emerging markets, including Southeast Asia, it's double-digit in many cases. So again, this is a great example of a use case. And I'm not even talking about the user experience. As I can tell you, it's 1,000,000 times more friendly to do a payment via stablecoin than via traditional banks. And actually, this is one of the benefits people are seeing in stablecoins, is that they allow people to send money globally 24/7 for pretty much no fees and instantaneously. And this was great. It was being discussed, but where this really took off was in June 2019 when Libra was announced by Facebook. I will never forget this day. I was in Palo Alto in California. And actually what Libra, Facebook wanted to do at the time was to make moving money around the world as easy and cost effective as sending a WhatsApp payment, or email, or a text message. And that is what they've been trying to do. And of course, it was pretty groundbreaking because initially what DM or Libra wanted to do was a new currency, a global currency. But of course, there was a lot of pressure against them. Even Donald Trump said, no, this is not going to happen. We have one currency in the world, and it's the US dollar. US politicians got involved and said, hey, any company, if you get involved with Libra, we will investigate not only your crypto activity, but all your payment activity. This is why a lot of these companies have to back off. But the reality is that actually we're seeing a lot of now more technology firms come into space. For example, firms like PayPal, yesterday was announced that they may be looking at doing their own stablecoin. Not only now these firms like PayPal enabling people to buy Bitcoin and cryptocurrencies, but in many regards now, these are firms that are empowering people to use it on a day-to-day basis. And you'll say, Henry, this is good, but I'm in commercial banking, I'm in investment banking, this doesn't affect me. Well, I have news for you. The data shows now that increasingly corporates, your traditional HSBC, Standard Charter, Bank of the BA client, are now starting to use stablecoins in cross-border payments, especially in Southeast Asia. Imagine if you're a company in Southeast Asia, you're doing business with the Middle East, you're doing business with South America. As you all know, the correspondent banking system is completely outdated, and more and more companies that trust each other are simply doing stable coins. So very, very interesting development to watch from that perspective to see how this is going to evolve over the next couple of months. Another big development that you need to be aware of is really what's happening with DeFi, decentralized finance. So DeFi, what is DeFi? DeFi is really delivery of financial services without any centralized intermediaries by leveraging purely blockchain technology. You'll say, this is crazy. How does this work? Well, there's a couple of benefits to it. One of them is actually open to anybody. It's permissionless, and there's composability. What does that mean? Actually, what does DeFi allow you? DeFi today allows you to do crypto trading, crypto borrowing, crypto lending, crypto asset management, and for those insurance folks, crypto insurance completely without any intermediaries. I can tell you there's guys in my team at PwC who fully operate in DeFi. If they need to borrow money, they need to lend, they need to trade, they do all using decentralized platforms. No need to go even buy the centralized platforms. But there's a lot of benefits to DeFi as well. One of them is what we call composability, which means that it's a bit like a financial Lego. What is that? Is imagine today yourself in Hong Kong, I'm sure there's a lot of fintech applications that you've seen and that you say that you would love to use them. For example, let's say you love PayMe from HSBC and you love Alipay, for example, from Ant. But you're like, I wish I could put them together, for example. Well, that's what actually DeFi allows you. Allows you to take a couple of different applications you want, put them together, and create your own fintech application. And that is what we call composability, financial Lego. Because all these DeFi applications are open source, you can literally mix and match whatever you want with them and come up with an offering. And all of these are smart contract based. So there's no intermediary that actually take that as in the middle, or that pretty much cannot be any mistakes either. It's basically computer code. You'll say, wow, this is crazy. How big can this thing be? Well, I have news for you. This space is growing very, very quickly as well. Right now there's over $65 billion worth locked in DeFi. Again, at the beginning of the year, last year, there was less than 1 billion. Went from less than 1 billion to over 65 billion today. So it shows you how much growth this is happening. And why this is beautiful is actually allows us for the first time to take a first principles approach to financial services. How can we deliver financial services without any intermediaries? How can we do this? And this is why DeFi empowers. And this is very interesting because if you're any executive of any financial institution right now, in your vertical, this is happening right now. This is growing very fast. And obviously now there's a lot of efforts to see how we can regulate this. How can we ensure there's KYC AML on this, which is quite difficult. And also who has jurisdiction. These things are not incorporated. They're purely smart contract code. So there's a lot of these questions are coming up right now that are becoming a big issue, but that's at least it's a topic you need to have on your radar. Another big topic is what we call NFTs, non-fungible tokens. You'll say, Henry, what is this? This is not a children's cartoon. This is an educational session on finance. Why do we need this thing? Well, let me give you, first of all, let me explain what is an NFT, and I'll tell you why it matters to you even in financial services. An NFT are digital tokens that are blockchain native, unique, and not fungible. What does that mean? Is actually that for the first time, we can mathematically prove that a certain thing is actually unique. For example, the little drawing that I put on my post-it here, I can, for the first time, mathematically prove that this is the real one, right? And this becomes non-fungible because I cannot interchange it with any other item. Comparatively, if I give you $200 Hong Kong dollar bills, each of them are fungible. If I owe you $100 Hong Kong, you don't care if I give you this bill or this bill, you just want $100 Hong Kong. And what's really remarkable with NFTs is they give you a lot of benefits. It's really unique. For example, allows us traceability. That piece of digital asset that we have, we know exactly who's owned it. We know exactly where it's been. For example, if I send a token to Henry, he can be ensured that the owner of that token is actually me. So before actually we had the professor was giving an example of Hong Kong real estate. In Hong Kong real estate, how many of these lawyers we do conveyancing, which basically they verify your land title to make sure it's correct. That is completely unnecessary right now. We could easily have this on a blockchain. We can immediately verify. And by the way, fun fact, the Law Society has been advocating against this because a lot of these lawyers will actually go out of business if that happens. And we all know how these Hong Kong real estate lawyers are when they do conveyancing. So the benefit of this when a digital asset, we have this traceability tools that actually we can verify at all times, make sure this asset is unique and make sure that I am the rightful owner. And also it allows us tradability because then I can move it around. Liquidity, immutability, interoperability. And this, you can say, this is crazy. And if right now, we're seeing a lot of uses in art, for example, digital art. But you say, Henry, this is absolutely crazy. Who's even getting involved in these things? You know, there's actually quite a lot, actually. For example, today, just to put things in perspective, the weekly transactions are over 1.5 million a week transactions. The number of users went from less than 25,000 14 weeks ago to over 500,000 today. So this is a big deal. But you'll say, what is this? Who would go and actually buy a digital item? This started 2-3 years ago with something called crypto kitties, where people were buying digital cats. You say, again, this is very stupid. Why would somebody buy a digital cat? Again, but what makes it unique? You know, and actually, and again, if you live in a digital era, there's a fact that I know for the rest of humanity that this cat, which is very unique, Henry was the owner of this cat. So again, it has a very emotional value, human value, psychological value that gives me the right forever. People can know that I was the rightful owner of this thing. But also people are buying now different kinds of asset. People are buying lands on the virtual world where each block, little square you're seeing here is a piece of real estate, is a token. Or people are buying skins. You know, if many of you ask your kids, ask your grandchildren, and when you make them for dim sum this weekend, what is their most valuable asset? You'll be surprised often some of the things they own that is the most valuable are in-game items. They play Call of Duty, they play any of these games on Tencent. Some of the items they have in-game are some of their most valuable assets. The beauty with this is if it's in an NFT world, you can actually change them, you can sell them, it creates a marketplace. Actually, Tencent yesterday went to court to try to block this with one of the companies that was trying to do this. So there's a lot of things going on right now, and the NFT ecosystem is growing very quickly. For example, a company in Hong Kong, in Cyberport, came out actually tokenized the first Formula One car. You'll say again, why is this useful? You can play around with this in some of the games, but then you can say that you are the one who owned the first Formula One car. And people are doing other stuff as well. Jack Dorsey, the founder of Twitter, actually did an NFT of his tweet. Or even this little image that you've been seeing at the beginning was sold for a couple $100,000 recently as an NFT. But this again recently took off with Top Shots. What is Top Shot? The NBA, every day now, if there's a basketball game, they take a little image or 2-3 second video and they make an NFT out of it. It's a video that lasts a couple of seconds. But again, as the owner of that, you own that. You know, there's only 5 of them. There's only one of that actually ever made. And you are able to be the owner for that. And you can even brag about it. You can have whatever you want with it. By the way, it's not very dissimilar to why a lot of people will buy paint of art and put it on their wall, for example. So there's a lot of these things you can see. And the best example of this was a couple of months ago when we had the digital artist Beeple sell an NFT for $69 million. This was actually pretty crazy. What was this artist doing for the last couple of years? Every day he's been making a piece of digital art. This art that is digital native. And he did a montage of all this painting that he has together, and he actually sold this to actually a buyer in Singapore for $69 million. And this is where the finance bit comes in, because you'll say, Henry, this is very nice, but yeah, okay, it's worth $69 million, great. Well, what does this mean? Imagine the financial tools that came out of this. For example, if you're a bank, I can prove immediately in a second that this painting is real, because you don't need to go to Christie's, Sotheby's. The provenance becomes a moot question. Here I can show easily from the blockchain whoever owns it. Second, I can create a lot of financial instruments out of this. For example, this painting now that is worth $69 million, I could separate this into 10,000 little digital pieces and sell it. So all of you could have exposure 1/10,000 of this painting. And what that means is whenever this painting is sold, automatically, there's actually, you get your 1/10,000 dividend, if you want, that is paid to you. And this is not only for the benefit that is given for the art collectors, for example, but even for the artists themselves. For example, a couple of weeks ago, I bought an NFT. And for the lifetime of that NFT, whenever I sell the NFT, the artist will always make 7.5% of the value of the sale will go back to the artist. So get an example again to show you how much these artists could benefit from it as well, without the big galleries and intermediaries that control them right now. So very interesting development there. And you can imagine here the benefits it provides to broader financial services. Think about land titles. You could put on like in NFTs, where people can actually transact the land title without going through these conveyancing lawyers and all these elements that we see. As a bank, for example, if we're moving to digital assets like these, it can actually make the way you're lending on the back of these assets very easy as well, because then you have full transparency and could technically eliminate the risk as well. The other big development I want to cover today is tokenization. So Henry, what is tokenization? What is really consists of issuing a digital token on a blockchain, where each token represents a real life asset, right? And this has many, many benefits of it, especially in a city like Hong Kong. As we know, as we saw with the events that happened a couple of months ago, now a year ago, one of the challenges what we had is, for example, real estate. The average person in Hong Kong is not able to buy a house. Why? Because they don't have enough money to pay the down payment on a building or an apartment, because it's so high. What is the benefit tokenization? Is like I can take any piece of real estate and actually separate into 10,000 pieces, for example, again, and be able to give people exposure to that asset class. And again, there's a lot of benefits from it, because I can actually increase the investor pool of what asset I have. I'm able to actually tokenize pretty much any asset that I want. It also reduces the cost of doing so. Today, if I want to get exposure, for example, to real estate in Hong Kong, I can go buy one of these REITs that we have in the market. For example, as we know with the REITs, the type of assets they have is very constrained. And also putting a REIT together is quite expensive, including because of the fees of the various service providers in the market. But imagine now if you could actually take your apartment and actually tokenize it and offer that to professional accredited investors if you wanted to. So there's a lot of benefits we can see here, and especially in cities like Hong Kong, where real estate is so expensive, where people are not able to get into the real estate ladder. At least it allows them to get some basic exposure to it. And there's obviously a lot of other practical benefits as well. If I put my lawyer hat on for a second, right now it's actually a bit ridiculous how we process corporate actions. The fact that for a lot of listed stocks, we have X date, where the stock does not trade, because we need to find out who the shareholders are, for example. In the beauty of tokenization, I can know pretty much at all times, not only who my shareholders are, but I could, in theory, do dividend payments that are not annual or quarterly, but I could do them even daily, hourly, even by the minute if I wanted to, because I have the technology that can do that using digital currencies on the spot. So a lot of benefits there that we are seeing there. There's obviously a lot of work going on right now around the world, from real estate in the US to Latin America to Europe and so on and so forth. So a lot of very exciting activity there. And last but not least, I want to finish off with one very, very important topic, which is a topic of CBDCs, central bank digital currencies. So again, what is a CBDC? I mean, let me take a step back first for a second. Today, if you're a central banker, again, Henry is a very forward-looking central banker, but if you're a central banker and you love Bitcoin, you're crazy. It's a bit like a taxi driver being excited to see Uber in the market. We all know in Hong Kong what happened when Uber came in the market with taxi drivers. They went to court to block them, to stop them. And frankly, the fact that Hong Kong taxi drivers still accept only cash is an embarrassment in 2021. But again, what happened? The same thing happened with central banks and Bitcoin. Central banks, when they saw Bitcoin, they're like, oh, no, this is not good. But they said, wait a second, there's a lot of things that we can learn, that we can implement. In the same way that the taxi drivers realized, and now we have apps like Hong Kong Taxi and the likes where people can use. And what is a CBDC? It's a digital form of central bank money that is issued by the central bank, but it becomes part of the monetary base of that economy. And here I think, again, it's very useful. I just put my professor hat on again for 1 second. Today, there's two kinds of central bank money. One is the good old cash that you hold in your hand. Actually, ironically, Hong Kong is one of the few markets where the banknotes are issued by commercial banks. Actually, it's Hong Kong and it's actually Scotland and Macau. Actually, they're only ones, the major economies. But if you think about it, normally cash money is a liability of the central bank. Is it the central bank money? The second type of central bank money that we have are the reserves that your bank, your lovely bank, holds at the central bank. The money that you hold at your bank, your money, your balance, is not central bank money. It's purely debits and credits. It's accounting entry on the books of that bank. And what's really exciting with CBDCs is for the first time in a very, very, very long time, we as a public will be able to have digital money. We're going to be able to have central bank digital. We're going to have digital banknotes, if you want, a third form of central bank money. This is why I find it's one of the most exciting times right now in the future of money, because we are the lucky generation who's going to see this. But you'll say, Henry, what's the point? What's the point of having this? Well, there's a couple of things. One of them, there's a lot of benefits to policymakers and central bankers. For example, one of them, it gives you better visibility on the monetary policy of your country. For example, today, the way the economists and policymakers measure the impact of their activities is frankly by estimates that we have, or it's pretty much high-level estimates. The fact that in many emerging countries, in our GDP forecast, we put a decimal shows that we have a great sense of humor. And what happens actually if you're operating in a CBDC economy, that the entire country runs on digital bank currencies, you could know live, immediately, what is the impact of a certain policy that you've made, and what is the economic activity in your country. For example, if I want to find out how much money are people spending in restaurants and in entertainment and in new territories in a CBDC economy, I can find out that information in 1 second. That's a big benefit. Second thing is stopping the black economy or tax evasion. Again, today, if you want to avoid taxes, you don't want the government to know how much money you're making, operate in cash. Comes back to our good old taxi drivers as well. But again, that's one of the benefits you have if we move to CBDC economy, actually allows you to actually completely be pretty much put an end to tax evasion, because you have visibility on every single currency that has taken place. The third one is money laundering. Today, the best single tool that we probably have against money laundering, ironically, are central bank digital currencies. Again, to put things in perspective, despite all the great efforts that banks do, despite all the great money laundering compliance folks that you have, colleagues that you have at the bank, we're able to capture globally less than 1% of laundered transactions. Less than 1%. To put things in perspective, globally, the UN estimates that between every year, 2 to 5% of global GDP value is laundered. That's from 800 billion to $2 trillion laundered every year. The benefit we have with CBDCs is for the first time, we have a fighting chance in combating money laundering. It doesn't mean we'll succeed, but at least it gives us a fighting chance. Corruption will still exist. People will put their kids into schools, send them to Canada, give them watches or bottles of wine, but at least corruption by cash will probably stop from that perspective, which is probably a good thing. The other benefit is we allows us potentially to embed monetary policy. So imagine today, if our government, Hong Kong government, is giving everybody often 5,000 Hong Kong dollars to spend. Right now we get the money, but I can leave it in my bank account. I may not even spend it. It doesn't stimulate the economy. In a CBDC economy, the government can put a CBDC, let's say 5,000 Hong Kong dollars in my digital wallet, and I need to spend it in 1 month. If not, it disappears. So there's a lot of these policies we can do, or interest rates, for example. Right now, as a policymaker, they really, for the cash that I hold, they cannot put negative interest rates, for example, which is a problem in Europe. But actually with a CBDC, they could embed the interest rate in the currency automatically and be able to activate it. So there's a lot of things happening in that perspective. The other thing that's important to note is actually globally, because of COVID, there was less and less demand for banknote payments. Finally, even our taxi drivers in Hong Kong started accepting digital payments. Finally, thank God. But actually what's interesting, at the same time, we had record levels of banknotes in the system. And this is a global phenomenon, by the way, not only in Hong Kong. The HKMA every I think month now publishes the amounts of banknotes in the public that are out there. But again, if you look at Singapore, Hong Kong, UK, and the US, we're still at a record level of cash in the system. And this is normal. Whenever there's financial instability, people feel scared and people keep cash at home. And actually, this was a problem during COVID because for many governments, it was a challenge. How do we are able to deliver COVID payments to the public? And this is why we've seen increasingly levels of CBDC discussions. And central banks have been very on top of this topic as well. Today, according to the Bank for International Settlements, the BIS, which is a convener of central banks, 86% of central banks are looking at this topic, 86%. And it's a big change because until very recently, the BIS was like, oh, no, this cryptocurrency thing is not for us. Don't worry. The system today works very well. We don't need to change anything. And of course, then obviously policymakers got worried, especially when Libra happened, because there are some genuine concerns. For example, with global stablecoins, if Libra came out, they were worried it could create currency substitution because people could prefer to use the global currency, and then maybe it's not a big problem for the US dollar or the British pound. For the smaller economy countries, this is a problem because it may create not only dollarization, but a currency substitution. And also the other thing is also this risk of financial stability, but also the biggest risk people had was it can affect bank funding. Today, whenever I deposit my hard-earned money to the bank is able to lend this out. And actually, from an economics perspective, that is how money is created. The bank takes that and lends it out in what we call fractional banking. But actually, the problem is if we're in a CBDC economy, especially in a low interest rate environment, that I'm able to keep the money in my digital wallet, then I'm keeping less money at the bank. And actually, then the bank does not have enough money to actually be able to lend it out. And then it may need to go get funding on the wholesale markets, and that increases their cost, and that may affect the profitability and revenue generation as well. So this is one of the topics a lot of the banks have been looking at as well. And this is why there's been increased focus on this topic. And what's important to know from a policy perspective, there's really two kinds of CBDC. There's wholesale CBDC, that is between the central bank and the member banks, including many of the banks that are listening today. And there's retail CBDC that is between the central bank and the public. And there's different models of this. I'm not going to go through each one of them, but all I want you to know is that actually for certain models in Hong Kong, we're very fortunate because the HKMA is probably one of the leading central banks on the topic, especially when it comes to wholesale CBDC. For example, the project that we have right now going on called Lion Rock Artenon, now that the PwC and the Central Bank of the UAE is involved in this as well, actually is probably the most cutting edge piece of work that we have right now. What this means is that whenever you want to make a cross-border payment, which as we saw before, is a complete pain today and very expensive, today every single bank that does not have correspondent banking needs to go via these correspondent banks. And what the HKMA is trying to do here with the BOT and other central banks is to create these corridors where we're actually able to have all these different banks are part of the corridor. They go to the central bank, they give their fiat money, they get a digital currency, and then they're able to send this money to each other. Who are the winners here? The winners are pretty much all the banks. Who are the losers are the big banks who have the correspondent banking relationships. And that actually is one of the benefits of this program. So it remains to be seen. I think it's very good to know that Hong Kong is one of the leading banks on this topic. When it comes to retail CBDC, there's a lot of activity as well. Again, here, probably the most important model that we are seeing, there's different models. I won't have time to go into it, but it's a two-tiered issuance where the central banks issue the digital currency and the money is distributed via some of the intermediary banks. That is what Bahamas is doing now. That is also what China is doing. And that was actually inspired by what the Swedes did, Sweden did, where basically the central bank issues digital currency and the banks become participating banks and to kind of manage the process. Because I can guarantee you no central bank wants to start doing KYC, AML, or open accounts for the public in order to do customer support for them. The banks have a role to play. So this is going to be very, very interesting from that perspective. And also I think it's important to understand there's different kinds of digital currencies. There's some of them that are token-based, CBDCs, which is a bit like fiat money, that when you can meet somebody offline, you're able to actually give them the value. And there's some that are account-based, where it happens via online account. The reality is probably the model that we'll have will be a mix of both. And for sake of completeness as well, we're also seeing some decentralized CBDC. The best example of this is the Marshall Islands, small country, doesn't really matter. They don't even have a central bank, But what's interesting here is that the Marshall Islands is issuing a decentralized currency where the supply is fixed every year, the inflation rate is fixed, and the government has no control over it. So very, very interesting. And I'm going to finish off with why this is relevant for us is because of China. Make no mistake, China is years ahead of any country when it comes to the future of money. The UK launched their task force of the first consultation paper in March 2020. The PwC has been researching this topic since 2014. And obviously there's been numerous pilots done. Many believe it's a matter of months where the M0, which is banknotes in China, will be pretty much banned. China is de facto cashless right now, but obviously a lot of activity happens via platforms like Alipay and WeChat Pay. But again, we're going to have the system. I mean, to show how advanced China is on this, the pilots they've done so far, they've managed over 2 billion renminbi, that's $300 million in CBDC transactions, over 12,000 use cases, which is absolutely crazy. And there's been 100,000 plus wallets that have been opened. It's not only traditional banks, but also a lot of digital banks are getting involved. And a good way what Chinese government is doing to get people on board, we have this lottery system. Last one happened in Shenzhen a couple of weeks ago, where basically 50,000 people got 200 kwai, equivalent to $30 US, that they were able to spend in merchants across Lohu, across Shenzhen. So again, very, very interesting developments going on there. If you want to see where the future of money is, it's not Silicon Valley, it's not New York, it's not London, it's definitely what's happening in China. And I'll stop here again. I said my big warning at the beginning is whoever tells you an expert, run away. There's a lot of fast-moving space here. And maybe one part before I pass it back to Henry is if you're interested in this topic, I have a weekly show on LinkedIn. You can scan it here, have a 60-second summary of all the developments you need to know in 60 seconds, and I summarize it. And I have a Sunday newsletter that comes up where I cover 3 big ideas that week on the future of money that you need to know. And if you want to learn about Bitcoin, you want to learn more about cryptocurrencies, you can go on my YouTube channel where I have a lot of videos. And I give you a scoop. It's going to be public tomorrow, but as of tomorrow, all my content will be available, not only in Chinese, but also will be available in French and Arabic as well. So we're definitely going global with the goal of empowering 1 billion other people. So that's all for my time. And Henry, I'm going to stop sharing my screen and I'm pass the microphone back to you.
Right, excellent, Henry. Really, really appreciate that. And it's been a fascinating overview and running over almost everything crypto and possibly the future of finance. We might just have time for a couple of questions from the audience. The first one is, how likely is cryptocurrency replacing fiat currency, do you think?
Yeah, great question. I think fiat currency, it's a matter of time. I think the big question would be, why are we still using fiat? I think the uses of fiat in many countries are the countries where the government has least control. I'll give you an example. Countries like countries like Italy or Greece, up to 30% of payments that still happen in cash. Why? Because people are avoiding taxes. It's happening in the black economy. I think from a policy-making perspective, having a CBDC economy is a way more powerful tool than the fiat economy allows us. I think we shouldn't forget that CBDC is actually fiat as well. I think the question should be, when are we going to have like M0 banknotes and CBDC? I think we're going to have a CBDC pretty quickly. When it comes to actually when are we going to have CBDC as a fiat, I think CBDCs are fiat, and I think it's going to remain like that for a long time. I think what's going to be interesting is to see the cohabitation of currencies like Bitcoin and CBDC, which is a fiat currency, and gold, and Bitcoin, which is more like digital gold, and how they will collaborate from that perspective, cohabitate from that perspective.
Right, thank you. I have another question you mentioned about Bitcoin would probably hold its value because it doesn't have quantitative easing, or it's not being affected by that. But you also talk about the non-fungible tokens. In a way, somebody would say that perhaps that's another bubble waiting to be burst because it doesn't really have intrinsic value behind it. What's your view on that?
Correct. So I think let's look at both of them. So Bitcoin, we can argue all day what is the real value. As you said, there's only 21 million of them, and there's different models. I mean, we can discuss how the value, what is the true value of Bitcoin that we look at. When it comes to that, I think there's a market for that. I mean, Bitcoin is very, very liquid. Bitcoin today on exchange, trades anywhere from $75 to $125 billion. There's double that in OTC. There's about double that as well on the derivatives market. So it's a very liquid. There's good price discovery. When it comes to NFTs, it's a bit like a piece of art. If I like my little drawing that I made on my Post-it note here, how much is this worth? It's eye is the beauty of the beholder. I personally think there's a lot of hype in NFTs. Everybody and their is making an NFT, but I think we should not underestimate that there's actually some fundamental value. The good thing again is whenever I teach at HKU, I ask my students again, what are some of the more valuable assets they have? Many of them will tell me it's their in-game assets. I think we should not forget that there's a lot of people that want this digital kind of assets. I personally believe it's a bit of hype right now. Like anything, there's a hype. It may collapse. But I think there's a lot of good things that will come up out of this NFT bubble as well, NFT evolution as well. NFTs are here to stay. I guarantee you NFTs are here to stay. So whether we like it or not, but the problem is they're not liquid. It's like a piece of art. What is the value of that piece of art? When there's no liquidity, it's a bit tough to say.
Right, thank you, Henry. Well, I wish we have the technology to freeze time so that we could carry on talking about everything you know about. But unfortunately, I'm afraid time's up. So I just want to thank you again for your time, for your sharing, and I'm sure the audience have taken off your contact method and listen to your podcast and what have you. Right, thank you very much again for your time, Henry. Thank you.
Thank you for having me. A pleasure, and thank you for letting us share our passion for the future of money with you all. Thank you.
Excellent. Bye.